Bitcoin is valuable because you escape the entropy and chaos of the real world. Bitcoin is valuable because it's 1,000,000 times faster, smarter, cheaper because it's digital. And Bitcoin is valuable because nobody can debase it. And you only have to believe one of those three things to think it's going up forever. But of course, I think all of those things. It's just a better idea, and it's going to continue to appreciate in price with the passage of time, with the improvement of technology, and with the debasement of the currency, all three of which we can expect.
Now, with fair value accounting rules becoming mandatory in 2025, companies can accurately reflect Bitcoin's value on their balance sheets. This eliminates the prior disadvantage where companies holding Bitcoin had to report impairment losses but could not mark up their gains. Another significant regulatory change on the horizon is the expected repeal of SAAB 121 under the Trump administration. This repeal would allow banks to custody Bitcoin, making it accessible to a broader range of institutions. For the first time, major financial entities can hold and transact Bitcoin just as they do with traditional commodities. This removes one of the last remaining barriers preventing mainstream corporate and institutional adoption of Bitcoin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The big idea here is that in the year 2024, the SEC approved the first digital commodity in the history of the world, Bitcoin, and fair value accounting became optional. And in January of 2025, this month, fair value accounting for that digital commodity became mandatory. And we expect in the first week of the Trump administration for SAAB 121 to be repealed. And that means that every major bank in the world will be allowed to bank Bitcoin. So what you have is a status quo for 80 years where a corporation could have all of their assets in real estate, in gold, in soybeans, in oil, or in treasuries. But of course, the only thing that looks liquid and fungible is treasuries, and it doesn't beat the cost of capital. And now, Satoshi invents this new digital commodity. It takes 15 years for people to decide that it isn't tulip bulbs. It takes many years for the government to embrace it. And in the year 2025 is probably the first year where you could reasonably say the banks will probably handle it, the government's not going to ban it, and it really is a commodity. And so now, if you run a publicly traded company, you have a choice between Bitcoin or bonds. And the bonds are minus 10% real yield, and the Bitcoin is plus 45% real yield for the past 8 years. And you know, you might not be sure that you're going to keep getting plus 45% real yield, but I would submit to you that even if Bitcoin's returns collapse to the S&P index, and if you said it's just as good as the S&P, having a commodity that performs like the S&P is 10% better than using a bond. And so the real revolution in corporate finance for a CEO is you have the opportunity to recapitalize a company on a BTC standard instead of a USD standard. And what that means physically is you go from being negatively polarized to capital to being positively polarized to capital. Instead of being repulsive to capital, you're attractive. Wouldn't you like to walk into a meetings and be attractive instead of being repulsive when you walk in the meeting? Some people would say the reason you want Bitcoin is because the currency is being debased. And that's definitely true if you live in Lebanon or you live in Venezuela or you live in Africa. When the currency collapses in 5 years or 10 years, then obviously you want the Bitcoin. But there's another reason the Bitcoin price goes up. And the other reason the price goes up is because it's digital. And that just means that at the end of the day, if I can move $1 billion from New York to Tokyo and back again every hour, every second, every millisecond, there's utility in that. Digital books, digital education is a million times faster, cheaper, lighter than the real thing. And so the digital form of capital is valuable. Even if you ran the country perfectly and there was no inflation, but you could still program the money to move at the speed of light 24/7, 365, and put a AI that's 1 billion times smarter than me or you in charge, there would still be utility for that. And then the third reason it's going up is Bitcoin represents digital capital or capital in cyberspace. I give you $1 billion and I tell you buy stuff in Russia. And so you buy a bunch of stuff in Russia, and then what? The Russian government perfectly operates in every way, and then you stop the passage of time and nothing ever decays or grows old, and then I guess it's almost as good, but not digital. But the point is, the passage of time continues. Governments don't run efficiently. The mayor may not do what you expected. Stuff rusts. There's a hurricane. There's a fire. All of those things are entropy and chaos in the real world. So it's my long-winded way of saying Bitcoin is valuable because you escape the entropy and chaos of the real world. Bitcoin is valuable because it's 1 million times faster, smarter, cheaper because it's digital. And Bitcoin is valuable because nobody can debase it. And you only have to believe one of those three things to think it's going up forever. But of course, I think all of those things. It's just a better idea. And it's going to continue to appreciate in price with the passage of time, with the improvement of technology, and with the debasement of the currency, all three of which we can expect.
Bitcoin's liquidity and global accessibility make it an essential tool for investors who require rapid capital deployment. Unlike traditional assets, Bitcoin can be sold or leveraged instantly, even on weekends and holidays. This utility drives its adoption and strengthens its long-term value proposition. Moreover, volatility acts as a filter, deterring uninformed or risk-averse investors while rewarding those with conviction and long-term vision. If Bitcoin's price followed a smooth exponential curve, early adopters and well-established investors would have monopolized its value long ago.
I think volatility can be harnessed. I would say if you're an investor, the right way for you to look at it is it's for long-term capital preservation. So if you have a portfolio of capital you don't need for 4 years, or more like ideally for 10 years, then the portion of your capital that you would hold for 10 years and invest, you put some of that into Bitcoin, you'll be fine. I don't think you should put capital you need for 4 days, 4 weeks, or 4 months. You shouldn't use, it's not a working capital thing. It'll give you a coronary and a heart attack. That doesn't make sense. But my last, I got two other points. One is it's volatile because it's the most useful thing in the world. It's because if you need $10 billion of credit on Saturday night to short the market, you can get it from the Bitcoin network. You can't get it from any of your other assets. If you needed to sell something for $1 billion in 5 minutes, you can get it from Bitcoin. You cannot sell anything else on a Sunday morning in 5 minutes. If, on the other hand, you wanted to take a long position on Sunday morning after someone else took a short position Saturday night, you can do that with Bitcoin. You cannot do that with nearly any other asset. So it is useful financially, and that makes it volatile because anybody can express an economic opinion as hard as they want anywhere in the world, and everything is linked to everything. And my last point, it's going up 60% a year for the past 8 years. If it was going up 60% a year in a perfect exponential with a beautiful curve that you drew with your artist hand, if that's the way it happened, then people stupider than you, richer than you, would have all the money, right? If I'm telling you it's going up 60%, and if you do the work and you can understand why thermodynamically it is, like, why is the water flowing downhill? Why does the waterfall look that way? Because there's gravity, and the gravity is pulling it downhill. Why are people running from insecure assets to secure assets? You know, why does capital flow from one place to another place? Why would you sell your Venezuelan currency and buy dollars? Was that random, or is there a reason, right? If you understand the fundamental thermodynamic, physical reason why the capital is flowing from 20th century assets to 21st century assets, from physical to digital, from financial to digital, if you understand that, then the best thing that could happen to you is for it to appreciate in a volatile fashion, because everybody else will be scared away from it. The 60% a year is still 60%, whether it's volatile or not. The difference is, because it's volatile, MicroStrategy is able to go from $1 billion market cap to $100 billion market cap because people are afraid to do what we're doing. If it wasn't volatile, Bill Gates and Warren Buffett and Charlie Munger would have bought it all, and I wouldn't be sitting on stage today right now. You would be listening to masters of the universe that were famous long before I came along, telling you how they bought the Bitcoin and how smart they are. And you would be like, well, of course we all bought the Bitcoin, because if it just goes up perfectly forever, then like, where's the opportunity in it for the committed, right? For the convicted, for the people that want to do the work. So I kind of feel like there's a certain natural selection to this. If you like money, if you need the money, if you're willing to take risk and you're willing to bleed to get the money, then Bitcoin will give you the money, right? But those are the people that deserve it. If you're just rich and arrogant and you only take risk-free investments and you just expect to stay rich, then, you know, you really want to help them? Do they need help, right? I mean, I don't think so. So I think the volatility is a feature that's a benefit to an investor. It's a benefit to a corporation. It's a natural characteristic of a life form. It's alive. It's vital. It's volatile. I think that there are two big ideas in corporate finance that are traditional, Morgan. One, volatility is a bug, and I think no, volatility is a feature. And two, and I'm going to say this in a hyperbolic way, but to make the point, I think conventional corporate finance treats capital as it's toxic. Like it's capital is toxic to the corporation, and I think capital is virtuous, right? What rich family would give away all their money, right? But every rich company does, right? Apple does, Microsoft does, NVIDIA does, Meta does. They all brag about the doing of it. They all brag about their buybacks. They all brag about their dividends. It's like they're literally getting rid of their capital as fast as they can. And you know, why would all these people that you're invested in that you think are so smart, if they're so smart, why are they desperate to get rid of the money? And the answer is the capital asset they use is toxic to them. If I give you $1 billion and you invest it in bonds that have a negative real yield of minus 10%, then you're destroying $100 million a year. So if they're smart and they know that, they know they have to get rid of the capital. They have to flush it out of the system as fast as possible. And I think that there's a new idea. The new idea is adopt a different capital asset called Bitcoin, and you get to keep the money. And now capital is not toxic. Now capital is life-affirming. Now instead of blowing away $100 billion of capital, now you could keep the $100 billion of capital and it grows 30–40% a year, and pretty soon you've got $500 billion of capital and your shareholders get rich. That's the big idea.
Saylor critiques traditional corporate finance strategies where companies treat capital as toxic and seek to distribute it as dividends or share buybacks. This approach stems from the limitations of traditional capital assets, which fail to preserve value over time. Companies like Apple, Microsoft, and NVIDIA are essentially forced to dispose of their excess cash because holding it in bonds or fiat leads to erosion of value. Bitcoin offers a radical alternative. By adopting it as a treasury reserve asset, companies can preserve and grow their capital rather than deplete it. Holding Bitcoin allows corporations to benefit from its appreciation, potentially turning billions in stagnant capital into hundreds of billions in appreciating digital wealth.